Good morning. I'm Victoria McEwen, CEO of Glenigan, and today we welcome you to our webinar where we're launching our latest UK and Ireland construction forecast, offering insights into industry performance up to and including 2025. I don't think it will be a surprise to anyone if I was to say that this year has been a particularly challenging one for the construction market. And I say that on the back of Brexit and the pandemic. The apparent bounce back at the start of 2022 was unfortunately short-lived, as the reality of the supply chain issues, skills shortages, and economic forces all hit the industry hard, meaning that project starts are at their lowest point since the pandemic. So today we're hoping to be able to shed some light on the issues that we need to be aware of and hopefully share some good news for the future of the market. I know we would all appreciate them. So if you regularly join our webinars, he'll be a familiar face to you, as I'm joined again by Alan Willen, Glenigan's own economics director and author of the forecast, who will be giving us an overview on his findings shortly. Good morning, Alan.
Hello.
I'm also delighted to welcome back Aaron Russell, Head of Content and Service at de Havilland, who will be offering us his views on the current political landscape. And there is always a lot to discuss on that front. Good morning, Aaron.
Good morning, Vicky.
And I'm also delighted to say that we're joined today by Alex Minnett, Head of Product and Markets at Chas, who Glenigan have recently partnered with. And Alex is going to share insights into changes that were recently announced by the Cabinet Office regarding compliance in the public sector. Good morning, Alex.
Good morning, Vicky.
So as always, there's lots to cover, but let's start with you, Alan, for an overview of the forecast.
Thanks, Vicky. Good morning, everybody. Well, look, I think the industry, as Vicky was saying, we face a challenging environment this year economically, which I think is really going to sort of have what already is having a big impact on construction activity during the sort of opening months of this year. Now, I think the good news is actually, whilst we saw a very dramatic fall in starts during the first sort of 4 months of this year, I do think the worst is now behind us to some extent, and we're looking at a more stable situation as we move through the rest of 2023. Nevertheless, I think that's going to have a negative impact really on the overall level of starts when we look back at over this year as a whole. Now, that sharp fall we saw at the start of the year, I think has really been prompted by a number of factors. If we look back to last year, we saw it had the mini budget I think it was the end of October last year, which had a very big impact on industry confidence, investor confidence, and actually consumer confidence as well. Particularly as we saw a very sharp rise in interest rates, which are already continuing to rise, and we're up to 4.5% at present, and there's further potential increases in the pipeline as the bank really targets inflation at the moment. And that's having a big impact on private sector level of activity. We've seen the sharpest fall in the opening months of this year in private housing, but it wasn't the only sector that's seen a marked decline in starts. But as I say, as we go through the course of this year, we are looking at a bit more of a stabilisation of activity. And certainly if you look at the wider economic forecasts, whilst OBR was forecasting at the time of the spring budget a 0.2% decline, they are for the UK economy as a whole this year. The IMF has come out with a similar sort of forecast, a slight increase, 0.3% for this year. So by and large, it's a pretty flat, stalled situation for the economy this year. But if you look ahead to 2024 and 2025, the projections are for a real strengthening in economic activity. And still, in fact, by 2025, the OBR is expecting us to get back up towards trend growth, which will be the really quite sustained recovery, but notwithstanding the initial bounce we saw from the pandemic. It's going to be, it's quite a long time since we've got to that level of growth. So from that perspective, I think it's a tale of two halves, effectively, in terms of the forecast this time around, in the sense that I think the immediate outlook is challenging, particularly for the private sector side of things. Less so for the public sector, so there's going to be some opportunities coming through there. But as we get into the second half of the forecast period into 2024 and quickly into 2025, there's really going to be a transition in activity and opportunities across the different parts of the industry, where the private sector is starting to come back, perhaps a bit more challenging environment for public sector work. So against that sort of overall sort of picture, I'll sort of run through our forecasts for individual sectors in a bit more detail, perhaps starting with the private housing market, which really, as I say, we saw a very sharp decline in starts in the sort of opening few months of this year, really relating back to what's happening in the wider housing market, where we have seen on the back of that very sharp rise in mortgage costs and economic uncertainty and the squeeze on household budgets that's currently in play. We've seen a real slowdown in terms of property transactions in the wider housing market. House builders who have been responding to that, they've not been bringing forward new projects, they've been focusing on building out and securing completions on sites that are currently already under construction. And as a result of that, as this particular project starts, it's seen the sharpest fall away in activity at the moment. Looking ahead for this year, I think it's going to remain a subdued picture. But as we get through into 2024 and 2025, we are looking at a picture of some improvement in household budgets going forward. Also a stabilisation. I think it's not just the level of interest rates that's having an impact. It's the fact that we've had that very rapid change in interest rates increases over the last few months that's really knocked consumers' confidence, made it difficult for them to budget perhaps and bring forward projects. So I think as we get into 2024 and 2025, we'll see more confidence coming back and the market starting to pick up. So we get a partial recovery in private housing starts as a result of that, really, as we get into the latter half of the forecast. So whilst we've got a sort of expecting starts to fall by a third this year, we've got growth of 7 and 8% later on in the forecast period. I think I'll just stick with the private sector areas as well. As I say, it's very much a division at the moment between tough times for the private sector during 2024, but a brightening picture going forward. And certainly if you look at industrial, which has been one of the star performers over the last few years, really on the back of that strong growth in demand for logistics space, as internet sales and retail have moved more online. We are looking at perhaps a bit of a consolidation this year. I think a number of projects perhaps that would have gone forward are being held back as they're being reassessed on the back of that rise in interest rates that we saw at the start of the year, and because of the sort of perhaps the sort of current sort of more subdued wider economic picture. But as we get into the second half of the forecast period, again, we're looking at a resumption of that strong demand for logistics space coming through and helping to drive new investment into the sector. And alongside that, the spring budget had some welcome news in terms of support for investment incentives. And that may well help to support not just increased investment in plant and machinery, but an accompanying improvement in investment in manufacturing facilities as well. So a sort of return to growth as we get into 2024. So whilst we've got sort of a small 14% decline this year, having grown by 40% last year, we're looking at another sort of strong rebound, 20% growth as we get into 2024. The other two, sort of the commercial side of things, in terms of retail and hotel and leisure, obviously very exposed to consumer spending. So they are again expect to have face economic headwinds during the course of this year. The squeeze on household budgets is really sort of limiting the amount of money that's going into both into retailing and hospitality sectors. And both those sectors have already been under a lot of pressure. Retail, from the structural changes we're seeing in terms of more and more purchases going online, and the hotel and hospitality sector generally has been hard hit during the pandemic by the lack of overseas visitors and extended lockdowns, all of which sort of damaged their financial viability. So they're still trying to recover at the moment from those really sort of those troubling structural issues. Alongside that, we've got that squeeze at the moment on household budgets, which again is holding back really investment activity over the forecast period. One bright spot within the retail sector was the investment by the deep discount supermarkets, the Aldi's and Lidl's. But actually, they too have reined back their investment programs. So that's going to temper the pace of recovery in retail spending that we're expecting over the second half of the forecast period. So after some significant declines of 25% decline this year, we got a quite spectacular percentage-wise jump of 42% for 2024. That really just kind of takes it back really to where it was in 2022. In terms of the hotel and leisure sector, as I say, discretionary spending is being reined back as households really look at their budgets and rein in spending. So again, that's going to temper the level of investment activity in sort of the first half of the forecast period in that sector. But as consumer confidence does start to come back and spending power hopefully improves, again, should see a sort of an uptick in hotel and leisure opportunities starting to flow through in the second half of the forecast period. The other element within the commercial sector is offices. And again, that's still facing significant structural changes that are reshaping the overall amount and the type of office accommodation that we require as really is reflecting the growth in hybrid working and changing work patterns. And I think that's going to continue to have an impact on the office sector. That doesn't mean there's not going to be a need for more investment in office accommodation. In fact, it actually is because the type of accommodation that is changing, that's going to throw up new opportunities, particularly in the second half of the forecast period in the office sector. Initially, at the moment, we're seeing a lot of sort of reshaping, remodelling of office accommodation. So a lot of fit-out work and opportunities like that coming forward. As we get into the second half of the forecast period in particular, actually, there's other changes that are coming down the line, a demand and regulation supporting more environmentally higher performing offices, both demand from corporate clients and sort of regulations that are coming through from government, all of which will perhaps prompt landlords perhaps reappraise their existing estate, look to see which projects, buildings can be upgraded to meet environmental standards, to make sure they can command premium office rents, which ones perhaps need to be demolished and completely reimagined and rebuilt, or potentially being converted into other opportunities. So all of that will throw up new opportunities for construction over the second half of the forecast period. So that probably covers the private non-residential side of things, which leaves us with sort of the government-funded areas. And there, I think we're going to see sort of a slight contrast what's happening on the private sector side in terms of actually, I think near term, there's going to be particular opportunities coming forward. If we look back at the spring budget and some of the sort of details in there, we can see that actually a number of the key government departments underspent their capital budgets last year, in the last financial year, and a lot of that extra cash has got rolled over into the current 2023-2024 financial year. So not only was there already a planned increase in capital funding coming forward, that's been effectively topped up by underspend last year. So that's going to help support, I think, the flow of projects, particularly in terms of area like education during the current year, which actually is one of the key growth areas, or the sole growth area really, across the different sectors during the course of 2022. Another positive area in the near term is health, which after really sort of a sustained period of investment, yes, it slips back a bit this year in terms of projects starting on site, but that's really to do better with the timing of projects coming through. Obviously, there's a lot of talk about 40 new hospitals and things like that, which really haven't really materialised as perhaps as the government was anticipating. But there's other projects that are moving down the development pipeline, and that should help to both support underpin growth activity this year, but renewed growth in terms of project starts in 2024 as well. And then finally, in terms of civil engineering, where actually that wasn't an overspending on the sort of Department of Transport side of things last year. I think that in terms of government investment side does remain under a lot of pressure. We've seen a weak start to infrastructure, underlying infrastructure starts this year. And we've also seen the government deciding to scale back and rephase a number of projects, HS2, for example, due to those cost rises. So I think that's going to dampen the flow of civil engineering project starts, particularly in 2023. Conversely, though, we're also looking at more investment within that coming forward from the utilities side of things, the regulated industries, and that should continue to help to underpin growth, particularly into 2024 with additional investment by the water industries, and the sort of final sort of run up to the end of the current AMP programme. So all of those things should help sort of lift civil engineering starts as we get into 2024. So how does that all come together? Well, overall, as I say, a very sort of depressing 18% decline in project starts overall for the current year. But as we were saying earlier on, actually a lot of that is due to the very weak start we saw to the first few months of 2023, and we are expecting a more stable situation during the remainder of this year before returning to growth. 12% rise in growth starts that's forecast for 2024, and then a further smaller increase of about 3% in 2025. So hopefully that gives a good overall view of what's going on in terms of the numbers and what's driving that change over the next few years. Then I'll hand back to you, Vicky.
Thank you, Alan. Look, huge amounts of information there as always, and I think your figures neatly articulate how this year has been for a great number of companies, actually. Looking, an 18% decline is huge. We can't run away from it. But I think that one of the positives that we take from your presentation, like you say, is that perhaps the worst is behind us and we should see improvements in the second half of the year. And really important for our clients to just look for those bright spots. And, you know, the forecast that will be sent out to everyone on the webinar afterwards will help people look for some direction in those green shoots that are out there. We just have to find them. So, look, we'll come back to you a little bit later as there's lots more to cover, but for now I'd like to bring in Aaron to give us some insight into what the political landscape is going to look like as we go forwards. So Aaron, over to you.
Thanks, Vicky, and thanks for inviting Haviland to contribute to the forecast and to this webinar again. So as Alan said, so expectations have been growing in Westminster that an election will be held in the second half of 2024, but it could be as early as spring 2024. But given the economic outlook, second half of 2024 looks most likely. So in anticipation of that, politics has slowly been returning to normal, sort of business as usual from the frenzy that we had last summer and the early autumn. This is with the government actually focusing on government and parties setting out their visions for the future and looking ahead to the election. So we've had the Prime Minister and his 5 priorities. We've had Keir Starmer's 5 missions. And yes, there are still scandals and exciting stories. However, they haven't really caused much drama, really. So Westminster looks like it's there's not a lot to suggest we'll get any major upheavals that we've had between now and the next election, but those are probably famous last words. So looking ahead to that election, there's a lot of gloom for Labour's main rivals, so Conservatives and the SNP, meaning that while polls have fluctuated so much, the next election is still very much viewed as theirs to lose. And obviously, when we're looking ahead to 2024-25 onwards, it's really important to really be knowing, understanding what's going on within Labour. So the big news on Labour front has been Shadow Chancellor Rachel Reeves' announcements saying that Labour would not be able to go ahead with its Green Prosperity Plan immediately after the election. It's because of the deteriorating economic environment, and instead kind of ramp up that investment over time. So that was £28 billion investment, a lot of it borrowing. So Labour are now saying that will kick in towards the end of the 2025-2030 period. So the Green Prosperity Plan was announced a couple of years ago when interest rates were somewhere between 0 and 1%. We're obviously not in that world anymore. So there is a lot of uncertainty about 2024-25 onwards. So it's quite significant. This is Labour's key differentiator on economic policy with the Conservatives, and there's a lot of stuff in there for this sector. I don't think it means the end of the plan at all. What we're hearing is likely to be rebranded. So they've looked at what Joe Biden's done in America and what he's achieved with his Inflation Reduction Act, which is essentially a green prosperity plan, but instead of focusing on green, which makes voters a bit nervous. It makes people think that they're coming after their money. Biden focused very much on how this plan would bring down inflation, create jobs. And I expect Labour to come back close to the election with very similar policy, but slightly repackaged. So it's not all doom and gloom there at all. So it's not dead, it's rebranded, it looks like. So still lots in there for civil engineering, infrastructure, house building, insulation. And on housing, the priorities for Labour, certainly the conference I was at, the party conference in September, was very much around social housing. Starmer was talking about home ownership, but Lisa Nandy, who's the Shadow Housing Secretary, very much talking about social housing and that being their main focus. Their goal appears to be to change, to move social housing up the types of home ownership that there are above private rented housing. Starmer has pledged to reintroduce house building targets, restore the national headline of 300,000 completed homes. We've heard that a lot over the years. Going to take on planning reform, apparently, and indicated that he wants to facilitate faster planning, especially for renewable energy projects and housing. They've also floated the idea of reforming compulsory purchase laws, amending the 1961 Land Compensation Act to allow local authorities to buy land at its agricultural value, as opposed to the future kind of value with future planning permission. So this would lower the cost of building homes to facilitate local infrastructure. Hopefully such a move could help rebound housing starts. But everything we're hearing about Labour is kind of caveated with everything we're hearing from Starmer and Rachel Reeves is they're really worried about the cost of a lot of these projects now because the economic situation has changed. And because of that, they're not going to inherit the same situation that New Labour did in 1997 when the economy was performing very well. But actually their discipline on spending is going to be very similar. Blair and Brown were obsessed about proving to people that they weren't the same old Labour Party, is going to borrow, tax and spend. Obviously ended up doing a bit of that, but that first term, don't forget, was very restrained. It looks like Starmer and Reeves are going to adopt a similar approach to give markets, but also the electorate, confidence that they're not just going to borrow and tax and spend. And I think this announcement that we've heard around the Green Prosperity Plan is kind of tapping into that. I think they were probably a bit worried that the Tories could attack them on that. So just turning to the government then. So Alan's talking about the economic headwinds at the moment. These are going to cause a really big political headache for them, and it's going to impact all of us. So we could see recession or sluggish growth. People are certainly preparing for perhaps that. So as Alan says, we're looking at growth returning in 2024-25. But that's obviously not ideal, really, the situation for an incumbent government going into an election year. So even if it is the end of 2024, if we've had this really sluggish period of growth, it's not ideal, and it does increase the chances of Labour winning. De Havilland's sister company, Forefront Advisors, has done some work on this. They focus a lot on kind of what's coming in terms of policy and politics. And they're saying that the government's going to face real pressure to loosen tax and spending. But given inflation, there'll also be a lot of pressure from the Treasury and the Bank of England to actually tighten during this period. So lots of potential big political problems, and that will impact all of us. For the Conservatives, certainly this year, their plan was very much to have, going into the election, a period of growth so they could then decrease and particularly lower things like income tax. But the way that inflation is and the sluggish growth, that's going to be increasingly difficult to pull off. So just to wrap up, in conclusion, some tricky political battles for the government as it deals with low growth going into an election year. But as Alan says, there is money being spent now for the sector, and there's growth, economic growth due in 2024-25. For Labour, they're preparing for a poor inheritance, which will hamper their ability to invest. But policies in the pipeline that would be positive for the sector, we'll see a lot more of that between now and the election and beyond. Thanks very much.
Thanks, Aaron. As always, very interesting take on what's happening in the political landscape, which is always fairly turbulent these days. And look, real focus from the government on the topic of housing, which we're going to explore a little bit more in our Q&A session, and the sort of perfect storm that might be brewing there as well. But, with activities sort of looking positive, and one of the bright spots being in the public sector, because there's some money to be spent now in the second half of this year, we've invited Alex to join us to talk to us about the Common Assessment Standard that contractors need to be aware of if they want to make the most of those new public funded opportunities. So Alex, over to you to help us understand that a bit more.
Thanks very much, Vicky. Yeah, you're absolutely right. It was a lot of talk around growth with the government at the moment, and some of the listeners may have heard of the procurement bill working its way through Parliament at the moment. But in March this year, the Cabinet Office announced some changes that will enable contracting authorities to specify the Common Assessment Standard that you've just mentioned, and that's for any significant new work contracts. This will pose quite a few new challenges to firms that they need to be aware of, and it takes them a while to move towards this and make sure that they get compliant. So a bit about the Common Assessment Standard then. It was formulated by Build UK and the Civil Engineering Contractors Association. So it's actually been written by the industry for the industry. And it's to come up with a standard question set to reduce bureaucracy and reduce cost and reduce time to contractors trying to work their way through this accreditation process. And it looks at a lot of areas other than just health and safety. So in the procurement policy notes, the PPN guidance notes 0323 that came out earlier this year, the Cabinet Office specifies that works for contracts that contracting authorities can use the Common Assessment Standard now, as well as another specification which is known as PAS 91, which is the publicly available specification 91. And this is in place of the Cabinet Office's own standard selection questionnaire, the SQ. But since this announcement was made back in March, BSI, who's actually wrote the PAS 91, will no longer be updating it. So PAS 91, as it is actually being sunset and no longer will be updated. So when you refer back to the PPN, you'll notice that it is then just the Common Assessment Standard that they are specifying. So the changes mean that construction firms looking to win these public sector contracts will now need to show compliance with this broader range of risk management. And this covers areas such as sustainable and ethical practices, in addition to meeting the standard health and safety requirements. So a key feature of the Common Assessment Standard is that it's designed to be accessible to businesses of all sizes. So again, with these question sets, very often they're tailored around the larger companies, the more blue chip companies. But the Common Assessment Standard is based around the micro business and also the larger business as well. So the questions and expected answers and expected data are changeable for the size of your business, which makes it a lot fairer. The assessment process can be completed either by desktop, or a lot of the main buyers now are specifying site-based audits as well, which obviously means that the likes of ourselves can go out and ensure that things are getting done on site as companies say they are. So companies apply for the certification level that's most appropriate for their business. And as I said, that's based on a wide range of factors, including the trade categories they work within, the size of the business, and also the requirement of which clients they're going to be working with. The assessment standards themselves are applied proportionately for the companies. So if you've got a turnover below 1.8 million or a balance sheet totaling less than 1.8 million, it enables us to tone down the questions and look at how we answer it properly. So looking at the Common Assessment Standard requirements, it's an annual accreditation, so companies will have to renew each year and will have to prove that they're continuing to improve. And they have currently 234 questions to answer, which covers 10 industry key areas. So first part is covering basic information about the company, their contact details, any professional body memberships, and details of any parent companies and group binding structures, etc. Moving on to part two is looking at any self-declarations and whether they have any grounds for exclusion of any sections within the question set. And then part three, we'll ask for evidence around that and start to look at the economic and financial standing of the company, as well as their technical and professional abilities. So Common Assessment Standard then looks to cover a broader range of risk management. It will look at health and safety, as we've already mentioned, but also starts to look at modern slavery procedures, carbon emissions, data protection, cyber security, and bribery and corruption as well. There's also some optional questions for central government contracts, if they wish to add those in, which again will go into more detail around the payment systems. Do you have the faster payment service for smaller contractors? And sometimes with government contracts as well, they'll want to look more into the modern slavery piece. So just a just a modern slavery policy statement isn't always just enough. We'd want to actually understand how you ensure that modern slavery is not adopted at any stage through your supply chain. So businesses needing to overcome the challenge, as we said, this will be a challenge to some businesses. They will need to work their way through it, but the guidance, as I said, came out in March, and public businesses had until June to comply. So as of this month, then all businesses need to be compliant, and all public sector tenders will go out detailing the Common Assessment Standard. So our listeners would need to start moving towards this now if they wanted to be able to tender for those.
Thank you very much, Alex. Really interesting. And, it's clearly important that our clients act now so that they can capitalise on the opportunities that we're expecting to see later in the year in the public sector and before 2025, as government spending is likely to become much more restrained at that time. So, super important for our clients to be thinking about that. And I guess just to be really clear on that front, Alex, what are the risks of firms who aren't CAS compliant? Will they be unable to win work on public sector projects outside of the NHS?
So the way that the PPN is written, Vicky, is yes, it would be specified they have to have the Common Assessment Standard. So very often it's set as a guidance. So if they are able to demonstrate that they have other systems in place, such as ISO standards, it makes that process easier to obtain for them. But because it covers those specific areas that governments will be looking for, and I reiterate some of the points from earlier, things like the modern slavery, the social value, all of these are very, very new to our industry, and this is the way that the government can make sure that we are actually compliant and we're working towards best practices. So at the moment, for the foreseeable future, for those larger projects, then it will be Common Assessment Standard that needs to be provided.
So really, really important that our clients contact a provider such as yourselves to get complete clarity and understand how they can be accredited, so that they do have every opportunity to bid for the work that will be out there.
Yeah, absolutely.
Okay. And Alan, just to bring you in, the Common Assessment Standard, is that likely to cause further delays and potential costs for contractors that are trying to bring sites to completion, coupled with the new building safety bill?
Yes, I think there's quite a lot going on at the moment in terms of different converging regulatory changes that people are going to have to pick their way through. Ideally, actually, having a common sort of platform to put forward for public sector works should, in the long term, make it easier for people to go and win that work. But obviously, they've got to get organised first to do that. And then alongside that, there's the the whole Building Safety Act that's coming through at the moment, which is really trying to, post-Grenfell, really try and drive a structural, cultural change in the way the industry works. That's its sort of primary objective, really, to make sure there is perhaps a bit more integrated working across the supply chain, much more sharing of information, and sort of a golden thread of information about a project is the way it is termed, so that all the parties involved in the construction project can pass on information about how it's being built, the safety issues relating to that, that ultimately gets passed to the client. And at the same time, that's going to be overseen and regulated by a sort of building safety body. So again, any changes you make, you're going to have to make sure you're going to have to be very confident that they are compatible with the safety requirements, particularly from a fire safety perspective. And if they're not, then you have to go back to the regulators. So again, that could be another challenge, in terms of getting everything ready when you're trying to bid for work, getting the paperwork into before you can start on site. But then during the construction process, similarly, you may have to, if you've got variations coming through as you're working your way through the project, you're going to have to make an assessment there and decide whether you're going to have to, again, refer those changes and have the new plans inspected by the regulator before you can proceed. Otherwise, you could be liable further on down the line. So there is a potential there to, it's going to require more integrated working, but B, to try and plan ahead to make sure you don't get unforeseen hold-ups in the construction process.
So really, really clear for our watchers today that the Common Assessment Standard needs to be really thought about and make sure that you're accredited before you bid for work, so that you're ready to win that work that is available in the industry. And then just really mindful of the Building Safety Act as you go through the build and get towards completion, to make sure that all the inspections and regulatory authorities have rubber stamped everything that you're doing to ensure that you don't get delayed completions, actually. So two big bits of news there for the industry to make sure that they're completely ready for. It's interesting, isn't it? Look, Aaron, we said that we would revisit and talk about housing, because it's definitely on the government agenda, and with the housing market in, let's say, turmoil at the moment, with private housing down 33% and social housing flat year on year. The renters reform bill, no fault eviction. What can you tell us about the prospects for the residential sector? Is there any light at the end of the tunnel?
I'd say certainly, I think obviously it's been a difficult period, and the government has been in a real mess on this area of policy for a little while. They've got real pressure from their own backbenchers. I think Michael Gove has been pretty successful pretty much everywhere he's gone to bring in really quite radical reforms, and I think he's really struggled with this one. I think that says more about the sort of planning system, maybe. This is the one area that's defeated him. Obviously, they're really focused, or Michael Gove's been really focused on creating areas that kind of communities have got to kind of buy in on. That's a really important part. So whenever I go to the Conservative Party conference, that's what they talk about a lot. And they talk a lot as well about good quality design. And that seems to be a really important theme. And obviously, I think we saw a development recently that was rejected by Michael Gove, and a lot of that was down to the design of it. It seems like, obviously there's lots of other reasons, but that didn't surprise me, because that's a really important thing that they seem to be focusing on. But Labour have made this a really key area, and I think that's going to be less of a thing for them. And they are really looking to increase spending, particularly on social housing where they can. Though obviously I mentioned the budgetary issues they're going to face, but they are definitely wanting to invest in this and really create a dividing line going into the election. So I would expect a lot of focus towards the sort of middle of this decade and onwards on that. But the government, obviously, there's no doubt, are struggling on this.
Thank you. And Alan, sort of with regards to housing developers, look, is now the time for them to be exploring different sectors, to be making sure that they can fill their order books with something other than residential?
I think a lot will depend on the sites they've got, I think. But I think it's been quite interesting, because over the last few years, there's been a tendency, particularly as you come out of the pandemic, a move away from high-rise developments. People are looking for more space into sort of a greener environment, more single family dwellings, so to speak. And I think that may start to swing back now. Now we've got the sort of the new regulatory framework coming through in terms of fire regulation. People know where they stand with that. That may start to give a bit more confidence to people to move back and actually find themselves competing perhaps with the build for rent, the institutional build for rent sector, which has kind of been dominating the inner urban areas over the last few years. There could be, particularly if they can organise the leasehold reform. So I think there's been a feeling that leaseholders have had a really bad deal for a very long time. They're talking about reforming that, and that could actually improve the appeal of apartment living. So you may actually start to see a swing back in that sense there.
Yes, it's interesting, isn't it? It's definitely one to watch and evolve over the coming years, that's for sure. And look, we talked about the Green Prosperity Plan and renewable energy. What are the bright spots, regarding our sort of policy there? And Alex, Aaron, and you, Alan, where should we be looking to get involved in that space?
I'll kick off in the sense that I think there's clearly going to be a long-term shift in that respect, much more towards renewables. The current government obviously is focused very much on the offshore wind generation side of things, but if you're moving down that route, it's not just the offshore element that's required. You've got to upgrade the existing distribution networks to accommodate that. And I think there's been a bit of a spotlight on the fact that actually there's a bit of a blockage in terms of delivering the transmission capacity to try and unlock some of these renewable sites. So I think that may be an area to look at. I think there's going to be a lot of pressure on National Grid, for example, and others to be able to try and resolve that issue and really to drive forward investment in those areas over the long term, because it's now a strategic issue as well as just an environmental issue, both two top issues, I think, in terms of the politics of it at the moment.
Aaron, how do you see that evolving?
Yeah, I think with the war in Ukraine, public opinion has really shifted on renewable energy, and I think even the Conservatives are starting to realise that it's not going to be as unpopular as perhaps they thought in their traditional heartland. So even if we keep the Conservatives government going to the next election, I would expect a lot of reform to expand renewable energy. Obviously, for Labour, this is a massive thing, and they are really focusing on it. Their spending, as I said before, will be slightly restrained at the beginning, but what they can do before then is they will look to make changes to planning laws. It's a really important area for them, particularly around renewable energy, to make it easier for those to go through. And then I would expect a lot of the investment, as Alan says, this all takes a long time to get through, but definitely a huge area, regardless of who wins the next election.
Indeed. And Alex, you've obviously got some industry experience in the renewable energy sector. What are your thoughts on this?
Yeah, quite interesting actually, because again, the problem is not just the change in the legislation around it. I think it would be a change in mindset, because very often the problem is companies trying to go for cheaper and cheaper products to try and maximize their profits. But again, if we go back to some of the points that we raised earlier, one of the major issues with solar specifically is around modern slavery, because we're buying a lot of the panels from foreign countries, and when you trace it all the way back, there's actually large issues with young workers actually creating those, and that's how they're getting them out there so cheaply. So that was quite an interesting one. I found out a lot about that. As you said, the industry experience I've got was working on what is still the world's largest renewable energy project in Benban in Egypt, which was a World Bank funded project, and very much with the lenders, World Bank and IFC in that case. They want to ensure that there's no negative publicity around the project, and they don't want to be associated with that. So looking at the sourcing of the materials and looking at where they come from, looking at who's installing them as an end user, that's all really important. And again, it just goes back to planning and making sure that you're not trying to cut corners when we're doing this as well.
Great, thank you, Alex. Well, look, unfortunately, we are running out of time for today. But I think, the key messages that we're landing for you, the viewers, for our clients today, is that there are some bright spots. The figures may look a bit gloomy with an 18% decline in starts, but there really are some bright spots out there, particularly around retail and discount supermarkets, refurbishment projects, and the bounce back that we're expecting hopefully next year in hotel and leisure. And really importantly, there is public money ready to be spent, but you must be ready to be able to bid for that work. So please look into the Common Assessment Standard, be really aware of the Building Safety Act so that you don't get caught out on those, and that you are able to bid for that work in the public sector, because as we move into 2025, that spending will be more restrained. And it's important that our clients are able to make the most out of the opportunities that are before them in the second half of the year. So as I say, we've run out of time for today, I'm afraid. So Alan, Aaron, Alex, thank you so much for joining me today and sharing your thoughts and insights with us. Thank you as well to you, the viewer, for joining us today. You will receive a copy of our latest forecast shortly, which covers a lot of the points that we've covered today, plus lots more, including the key recommendations that firms can consider going forward. If we can help you and your business with any additional market insights, or if you need some help finding where the new sales opportunities are for your business, then please don't hesitate to get in touch. We are here to help. But for now, thank you, and we look forward to seeing you again soon.